Yes, madam. Yes, ma'am.
Yeah. Good evening, one and all. For the webinar organized by Hindustan Chamber of Commerce on the topic Guidance to SMEs to list in NSE Emerge. I now invite CAK Suresh, President, Hindustan Chamber of Commerce, to welcome the speaker and the audience.
Good evening to all. On behalf of Hindustan Chamber of Commerce, I extend my warm welcome to today's speaker, Mr. B. Gauri Shankar, whom I know very well. In fact, he is a very active person as far as NSE business as well as administration is concerned. So we are lucky to have Mr. Gauri Shankar today to talk about this important issue of listing of MSMEs on the NSE platform, that is SME Emerge platform. All of you know that SMEs are, rather MSMEs are playing a great role in development of Indian economy. If you analyze the data which is available to everybody over in the, when you Google it, evident that 60 to 65% of jobs are given by MSME only to most of the population. Not only that, MSMEs are really backbone of India to achieve the 5 trillion economy, which our Prime Minister already visualized to achieve, I think, next 2 years maximum. That's what they already planned to do that. So in order to achieve that 5 trillion, government is pushing Make in India, Made in India, Digital India, a lot of programs, similarly encouraging startups. The startups may come under MSME or maybe the other segment, but the government's intention is to help the MSME in a big way, to see that they are withholding their power to sustain during this pandemic, as well as to come out and push the economy to the next level. In the budget also, we have seen many supports have been given to MSME, particularly they have further allotment has been given, fund has been given to MSMEs to under the employer guarantee scheme, so that they can rather have their working capital hardships to a minimum level. But the most important thing for MSME is that they have to feel that they are also a big corporate. That feel will come only if you really want to know the valuation of your business. Your business valuation, yes, internally you may think this is what my valuation, but externally when somebody comes and does an audit, the valuation may be different. Why? Because sometimes, many times, we ourselves regarding health, for example, health, I may think I'm very healthy. But if I go for an examination of my body, then I will come to know that what are the problems I'm having, which I would not have visualized at all. Similarly, in the case of MSMEs, many entrepreneurs thinking that their valuation is this, that. In some cases, rather many cases, they are undervalued also. They may not know their value also. So in order to bring out the valuation of their enterprise, NSE has given a beautiful platform, SME Emerge platform, whereby the small enterprises, that is MSMEs, can list their enterprises and see that they're also like big corporates like Reliance, feel themselves pride of being a part of the capital market. That's what the whole idea of listing in exchanges. So when you're done listing in exchanges, two things happening. One is your valuation goes up, rather you know the real valuation, and you will also work towards improving the valuation. Thirdly, what will happen? You will follow most important thing of exchange rules. Exchange also stipulates some basic rules to be followed, corporate governance and other things, in a small way to start with. Once you do that, naturally the discipline also will be imbibed into the business. The MSMEs, many MSMEs are failing because of lack of financial discipline, lack of business vision, and lack of differentiating ownership from management. These are the problems of MSMEs. That's why in order to get a ground, rather in order to get a grip over the ground, the MSMEs should list in platform like NSE. Why NSE? Because NSE has what is called more activities on their platform rather than any other platform. Even BASE also has that, but NSE platforms are more having the activities. In addition to that, one more information. Recently, when MSME listed on this platform, the price was around 50 or 40, whatever it is example. But suddenly, due to one JV, the price magnitude, almost it gone to 30 times. Please understand the power of valuation within shortest period of time gone to 30 times. So all these things, becomes rather helps you to finally value your enterprise accordingly, take pride out of it. You will become, you yourself will satisfy, oh, I created this much wealth for yourself as well as for the public also. Here you are allowing the public also to participate. In other words, indirectly you are committing to the public that I will run my business in a disciplined way. So that commitment also you are giving to the public. So that's why listing is always essential. Listing will help you not only for this, even to raise further funds. You can go to the financial institutions, banks, even other, private equities. So they will come and give you once your valuation is apparent, when it is transparent in a system. Why? The valuation helps you to make the valuation transparent. Listing is helping you to know the valuation in a transparent manner. Nobody will question it. Maybe here and there 5% or plus minus, you can discount it because of some expectations and other things. But more or less your valuation will be 90% correct as per the exchange listing. That's why my request to all MSMEs in our chamber as well as outside who are joined today, please make use of this MSME platform as a first step to become later on a category A share company. Please. With this introduction, I am leaving the floor to Chitra.
Thank you, sir. I now call upon Ms. Anand Rajagopal, Chairman, MSME Committee of Hindustan Chamber of Commerce, to tell us about the importance of this topic.
Yes. Good evening, President. Good evening, Mr. Gauri Shankar. Good evening, office bearers, and good evening, attendees. Welcome to this webinar. And if you look at the definition of MSME, the revised definition of MSME by the Government of India, or RBA, states that small enterprises should have a fixed capital or plant and machinery of less than 10 crores and turnover of about 50 crores, less than 50 crores. And medium enterprises, they say the plant and machinery should be 50 crores or less, and turnover should be, or sales revenue should be 250 crores or less. So these are the two categories. If you look at micro, they are very small, and therefore there is a question whether they have the ability to list in an exchange or not. So I would restrict, whatever the introduction that we will focus on is to, considering the small and medium enterprises where they need capital for expansion and they are unable, they knock on several doors, but they are unable to find the capital easily. For example, a small enterprise, what are the bottlenecks in finance? President touched on the topic. So working capital is a major bottleneck for any MSME, a small and medium enterprise. Similarly, somebody wants to have a capital expansion. I want a term loan of 5 crores, 6 crores. My turnover itself is 15 crores, 20 crores. So the ability, because when you approach a bank, the first question that the banker asks is, what is the collateral, additional collateral that you are going to bring on to the table? So this is the first question, and probably, the only question that you will be asked. More than the project report, what is the viability of the project? Is your term, the term loan that we are going to sanction, how profitable it is, what is the IRR, that, what is the cash flows, all that. Okay, those are issues that will be looked at. But more importantly, the question will be, what is the collateral that you are bringing in as a, MSME company? So what are the other options that are possible? You can approach private equity for funding of equity. But private equity is a tricky affair for startups, high-tech areas, deep technology, internet area, embedded technologies and similar areas. Private equity is possible. But when it comes to MSME in traditional sector, whether it is textile segment or any 10 other segments, traditional segments, but which are very important for the economy, whether it is mechanical engineering or other export-oriented segments. How easy is it for them to get the funding, private capital funding or private equity funding? It is a big question mark. So probably the only option for a company which is growing healthily, in terms of working capital additional requirement as well as term loan and capital requirement, the only viable alternative would be to list on an exchange and take it forward. And the cash flows, whether it is working capital, they can always be collapsed. So what are the options again in India if they want to list and raise the capital? It is either going to be BSE or NSE. So NSE, there are more than 240 companies or about 240 MSMEs already listed on the MSME Emerge, NSE Emerge platform. And therefore, and NSE also has a reputation of looking at quality companies, good liquidity, and they offer good liquidity, and the cash flows are all parameters they look at. Whether the management of the company is good, corporate governance is good, they look at all the variables and parameters and then decide whether they could be permitted to list on the NSE stock exchange. So the parameters that they say are high. So if you are a good quality company with good management practices and a good healthy cash flows and profitability and good growth as such, whether it is order backlog or other areas like joint ventures or expansion, capital you need, NSE would be a good platform to list on. And NSE, incidentally, even in the derivative segment, they are, global rank number, one in the global arena, and they have a very good reputation. Liquidity is wonderful in NSE exchange. And for SMEs, that would be a good platform to look at. With this introduction to the topic, I will turn the floor over to the guest and Madam Chitra. Over to you.
Yes, sir. Yeah. Thank you, sir. I now invite Mr. Atul P. Payani, co-chairman of MSME Committee of Hindustan Chamber of Commerce, to introduce our speaker.
Not able to hear you, sir. Unmute, then you try. Hello. Unmute, sir, unmute.
Yes, sir.
There seems to be an audio problem.
Okay, Chitra, you have biodata, you read it.
Sir, we will go on to the speakers. Sir, Mr. Buddapalli Gauri Shankar is the regional head, BD South of NSE Limited. I now invite him to address the audience.
No, 1 minute. You're not having biodata, Chitra?
Not.
It's fine, sir. I think in your opening remarks also, you've actually introduced me enough. I think, thank you very much for that. Thank you very much for that kind introduction. And can I start, sir?
Yeah, please, sir.
I think Atulji has some audio issues. Thank you very much. Thank you, Mr. Anand Rajgopal, for setting up the context for today's session. CA Suresh Krishna, President, Hindustan Chamber of Commerce, other dignitaries, office bearers, and members of HCC, entrepreneurs from the state. It gives me immense pleasure to be here on this webinar, presenting on guidance for SMEs to list on NSE Emerge to this August gathering. And I would like to thank Hindustan Chamber of Commerce, entire team, for giving us this wonderful opportunity. It is always very exciting for us to interact with entrepreneurs and spreading awareness on or taking queries from them on the platform. I hope you all are taking care and doing well in this pandemic. We are going through actually unprecedented times, and there is a lot of uncertainty out there in the business as well as in the markets. While everyone is actually getting prepared to live with the new order, there is a need for to work on the immediate challenges that the corporates will have to deal, particularly in managing their finances. And when we talk about SMEs, they would need it the most. When we look at even maintaining the top line is going to be pretty challenging for many SMEs who got impacted in the pandemic. Though the long-term outlook for the entire corporate India looks positive, even on the broad market indices are doing great. there is a need to work on addressing the immediate challenges that SMEs would face. To begin my presentation, let me share my screen.
Yeah, 1 minute, sir. Please hold on. Yeah, given, sir, you can.
Yeah, thanks.
Thank you, sir.
Are you able to see the slides in the slideshow?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Thank you. So, in fact, Suresh Krishna sir has already given a complete gist of what is going to be there in my presentation. In fact, he has covered, the role that SMEs really face, the play in the economy, what is the need and what are the challenges that they really face in raising the finance, what are the issues in the existing modes of funding, and why one should look for listing themselves, what are the advantages and what are the key challenges, and why NSE. And thank you very much. In fact, I think that would be the probably I will go into the details that constitutes the overall flow of my presentation. So as I mentioned, SMEs plays an important role, and you can see the numbers out there on the slide. They play an important role in any developing nation's economy, and they are, rightly said, considered to be the backbone of the economy. They contribute significantly to the employment, to the GDP, to the exports. You name any economic indicator which evaluates the state of the economy of any company. They really score very well in all those quarters. In spite of having such a high significance in the economy, SMEs face a lot of challenges, problems particularly with fundraising to meet their long-term requirements, which is their capital requirements. SMEs had very limited sources of funding prior to emerging, so which again come along with various limits on the amount that they can fund, like attaching it to collaterals, so on and so forth, and also the tenure of supply. It will come with a fixed tenure of supply. It is not a perpetual supply of funds which an entrepreneur or enterprise need for a long term. So I assume many of you would be aware that we already have a platform where larger corporates are listed after raising funds from public through IPO process, which is also known as main board listing platform. We call it as main board listing platform, where more than 1,900 companies are already listed and which are available for trading, and which the sector analysts cover. However, it was very difficult for small and medium enterprises to satisfy the eligibility criteria, norms, and the cost of listing, because of they were unable to raise equity from public. That these were the two things that was actually keeping them away from raising public equity. This actually triggered the need for creating an additional alternative and more efficient sources of funding for SMEs, because of which NSE Emerge has come into the existence. The Prime Minister's task force in the year 2010 recommended setting up of dedicated stock exchange for SMEs to enable themselves to raise equity capital for growth and expansion, which was otherwise available only to the relatively larger corporates. So the entire ecosystem was created such that the large number of SMEs, growing SMEs, which has a potential to emerge on a bigger platform, could easily meet the eligibility criteria and access the public equity. So these were the main objectives with which the platform was launched. Subsequently, SEBI has let down the led the regulations for governance of SME exchange platform, which led to setting up of our NSE Emerge in the year 2012. NSE Emerge platform has been actually created to facilitate the growth and development of SMEs exclusively in India to meet their long-term capital requirements, funding requirements. Excuse me. This platform does not require any collaterals, unlike in debt, and it's very safe as it is regulated by SEBI, Securities and Exchange Board of India, and available as a separate segment in NSE. So it is just as an additional segment made it available. So it is expected to get a wide variety of investors into the business as the same trading members who are allowed for trading the main board listed companies, the same network, the same trading terminals as a main board exchange. So the same member network is used. We have more than 2 lakh plus terminals across India. So the security once gets listed on the platform gets the same eyeballs as in case of the main board company. Since then, 239 companies got listed on the platform, and more than 3,600 crores of funds have been raised through this NSE Emerge platform. The average issue size, if you look at the average ticket size that we have seen, is around 15 crores. The companies listed on Emerge platform come from 20 different sectors. So it has got a representation from wide sectors of the economy. It is not concentrated or exclusive only for a particular sector. It is open for all sectors. And out of these 239 companies which got listed, 96, in fact, as we speak, 97 companies have already been migrated to the main board platform. This we will discuss in the coming slides. So out of these 239 companies, close to 100 companies have already migrated to the main board platform, which means they've emerged bigger on a larger platform. Now, when it is very important to understand or assess. Most of you are entrepreneurs or advisors to entrepreneurs or managing these enterprises. To assess, when one should access this particular platform, what is the right time? Are you at the right phase to, or is it the right time for you to enter? What are the things that we should check, to assess yourself? So based on the stages of growth, we can classify the companies into these 4 buckets that you can see on the slide. Startups, early stage, growing phase, and larger company. At the startup stage, as you can see, sources of funds are mainly promoter owned. That is either owners' own capital or funds borrowed from friends or family. So that is how startups would really emerge. And then as they move on to the early stage, the sources of funds, that net widens a bit, along with the own funds, family funds. The entity may also get help, aid from the government schemes, promotion scheme, funding from banks. That is also gets opened. And if the business is really good, then it may also attract some angel funds or VC investors into it. Now, corporates who are large, which are in the top bracket or bucket, they can easily satisfy the listing eligibility criteria and can access the capital markets to raise funds, the public equity. However, the entities which are above the early stage, that is, that we discussed, and who wants to emerge bigger, aspiring to grow big, they face challenges to secure additional sources of growth capital, and they had very limited additional resources. The popular source of funds, like Sureshji has mentioned, banks will have limits. Banks will have limits to the extent to which they can kind of fund. Even if the company is good, the fundamentals are good, they will have their own internal risk management measures, which limit them in terms of the exposure to a particular corporate, or they may have each client-wise limits. So that is where it really restricts. Some good corporates may also attract private equity investors. However, it comes with its own caveats in terms of control that they may want to have in the decision making. And even sometimes when you are in the growing phase, the VC investors or the angel investors who joined you at the early stage may want to have an exit. So it is really difficult for a growing phase company to find new investors there and exactly who can kind of match. So it is, the companies which are in this particular bucket of growing phase. If you are in that stage, then you should ideally be considering listing yourself on NSE Emerge. So you have moved from early stage and want to grow big. Now you need additional funds to grow big. You have been doing well. You are a growing company. You need additional funds for growth. That is the time when you should look at listing yourself on the NSE Emerge platform. Now, having identified, whether you are at the right phase of, or you are ready for listing, or you are the right pet for listing, it is very important to understand, the regulatory framework prescribed in terms of eligibility criteria. I'm sure most of you would be, interested in this particular slide. Who all what is the regulatory framework that is kind of prescribed. Like I said in the beginning, this entire ecosystem has been created in such a way that majority of the SME corporates can access this particular platform. So the eligibility criteria is pretty simple. If your paid up capital, if the entity is paid up capital post issue on the face value should not exceed 25 crores. So if it is between 10 to 25 crores, companies are eligible for both main board as well as NSE Emerge. Even if your paid up capital is less than 10 crores, then also you can go for SME board. So now the limitation of minimum 10 crores is not there. And when I'm talking about this paid up capital, that is on face value, not the market cap or market value. Does this mean that a company cannot raise more capital beyond this? I mean, beyond 25 crores? The answer is no. If your business can command premium, the issue size could be, as high as even 100 crores. We have companies who have raised, close to 100 crores on Emerge platform, and we have seen 15 crores is the average ticket size. So if your post paid up capital should not exceed 25 crores is the regulatory prescription, and over and above that, you should have at least 3 years of operational history, that you should be in existence. The company should be in existence for at least minimum period of 3 years. And out of these 3 years, 2 years should have a positive cash accruals and the positive net worth. That is the criteria. Now we, if we look at the regulatory framework, in terms of operational framework, once the company, thinks that it is in that phase of growth phase, and they also meet the eligibility criteria prescribed by SEBI and the exchange. Now, when you look at the regulatory framework which is being prescribed, again, here there is a lot of relaxation that has been kind of provided for SMEs to list on the platform. So the IPO, once the IPO is opened, now what are the regulations pertaining to IPO? To be successful, there has to be minimum 50 allottees in the issue, in the IPO. Whereas if you see on the main board, the minimum requirement is there has to be at least 1,000 allottees, successful allottees, not just subscribers, but at least 1,000 on the main board. Whereas on Emerge, even if there are 50 allottees, then your IPO will be successful. And if you see the DRHP, drafted hearing prospectus, it is in the same format of the main board. There is no change there. However, filing and observations is done only at the exchange. So the DRHP in case of main board is filed with SEBI. Here the DRHP is filed with the NSE. So again, there is, there you save time, and the onus of approval and the listing is, or doing the due diligence is on NSE. So the time to go for listing, comes down to that extent, and there is 100% underwriting of the issue. So for those who probably to further elaborate the term underwriting. So once you decide to go for an IPO, so the entire issue is kind of underwritten. So if there is any unsubscription or undersubscription that happens in the issue, so the unsubscribed part will be subscribed by the underwriters. So that actually provides peace of minds to corporates. So once you decide, in no case it can get into a development, otherwise because of poor disclosures to the exchange. So once you decide, there is a 15% mandatory undertaking that has to be done by the merchant bankers, and remaining 85% also they themselves, and if the company is good, the merchant banker themselves underwrite, or they can rope in other institutional players to kind of underwrite the 85%. But however, the entire 100% of the issue size is being kind of underwritten. And corporate should dilute at least 25% of their capital. This is one of the requirements. And another unique thing over here in this Emerge platform, which differentiates from main board platform, is that there is a mandatory market making for a period of 3 years. So when we say market making, so there will be authorized appointed market intermediaries who would be continuously providing, once your company the company comes with the IPO, subsequently it gets listed on the exchange for trading in the secondary market. So in the secondary market, there will be market makers who would be providing continuous quotes both on buy as well as sell side, so that all the investors who have got into IPO, if they want an exit, so there will be a counter quote. And similarly, all those investors who really, prospective investors who want to get into the company also would have counter quotes. At any point of time, with prescribed minimum bid-ask spreads, there will be orders on both sides. Again, that gives a confidence to the existing as well as prospective investors into the company. This is again another differentiating factor or unique factor from the main board. Post-listing compliance, if you see, that is in terms of submissions, SMEs need to submit half-yearly audited accounts instead of quarterly. Quarterly is a requirement for the main board, whereas here it is half-yearly. And even if you can publish these results on the company's website, that will do. No need of going for print media or that cost saving. Again, this helps in cost saving. Corporate governance norms are same as in case of the main board. There is no compromise on corporate governance norms. And yeah, we spoke about migration. So SMEs can migrate to the main board. So after listing onto the Emerge platform, subject to meeting of eligibility criteria, that is that they will have to kind of spend some 2 years on the Emerge platform, and some additional eligibility criteria such as market cap being above 25 crores. These companies can migrate to the main board. Like I've mentioned, 96 companies have already migrated to the main board. And in terms of investors, when you see the minimum application size is 1 lakh. Unlike on the main board, here the minimum application size, if someone wants to apply in the IPO, I think in the main board IPO, it is around 14,000, 15,000, the minimum, lots. Here it is 1 lakh, and also the minimum trading lot is 1 lakh. So when I say trading lot, if you want to buy or sell the stocks of NSE Emerge companies, the order size have to be in multiples of 1 lakh. This is again a differentiating factor. So unlike on the main board, you can buy and sell in the, even in a single lot, single share. Here you have to buy or sell or deal in bundle of shares, which is, of 1 lakh in the multiples. So these are the differentiating factors from the main board. Here the idea is again to have more informed investors investing in SMEs, since they are kind of perceived as new and bit risk. So this regulation was kept. There have been feedbacks that we have received, even which have gone to the regulator, saying that probably that can be kind of looked at in considering the review of the lot sizes. But this is at 1 lakh right now. Now, how can a company list on NSE Emerge? The process, though we would have segregated into 7 different steps, it's pretty simple. First, I think probably 50% of listing is done with promoters' acceptance that they want to go public. It's basically the mindset. If they decide that they want to go public, which means they would dilute that 25%, minimum 25% requirement. If they want to go public, they want to go transparent. So that is the first decision. Once they decide, we would see the audited financials to check whether in principle you are the company is eligible for further processing. Then the company would appoint intermediaries. So here, like in case of main board, the intermediaries are almost the same: merchant banker, RTA, banker to the issue, advisors. Over and above, there will be market makers and there will be underwriters. So the important intermediary which plays a significant role here in SME going for listing is merchant banker. There are specialized merchant bankers, category 1 merchant bankers who, this list is pretty much available on SEBI's website also. So they coordinate with all other intermediaries. So the second step is appointment of intermediaries. And of course, the third step is preparation of DRHP, which again, merchant banker in consultation with the company prepares the DRHP, and the same is being kind of filed with the exchange. Exchange will work on those documents and will do the due diligence. Once it is found satisfactory that all the disclosures and the due diligence results, then exchange grants in principle approval. Then the IPO issue is announced and opened. After the IPO, the listing of that company would happen and the company's shares would start getting traded in the secondary market. So this is the entire process of listing. Now, now moving on to the value proposition for issuers. So which here issuers, I would mean SMEs who would decide to go ahead and list themselves on Emerge. The benefits are multifold. Some of them Suresh Krishnaji has already mentioned in his welcome speech. Just to go into the details, listing is actually is efficient and cost-effective form of raising the capital, because equity financing lowers the cost, lowers the debt burden, leading to lower financing costs. And of course, it makes the balance sheets healthier for SME. For debt financing from banks, SMEs require to commit collaterals. SMEs will have to pay interest at fixed rates and service the debt for a long period till the repayment, irrespective of business cycles. So these are the things. And even SMEs assets are also subjected to attachment for recovery, and if principal or debt or interest are not paid. Whereas equity, an investor, is like, I'm sure you would be knowing, is like a partner for the SME. So there is no compulsion to refund the amount invested in shares, no obligation to pay interest on equity. It's a public equity, and investor also reaps the benefit if the company performs well in terms of appreciation of the investment or the shares that he is holding. Of course, the equity capital has one-time cost of raising it. That is one time. But if this cost is apportioned over a long period of time, the cost of capital is, looks insignificant. And both are essential. In fact, debt and equity both are essential. Entirely, highly leveraged balance sheets or only one-sided. There has to be proper balance between debt and equity, and every SME requires to maintain these ratios for healthy balance sheets. The role of both debt and equity are complementary here. And also going for public issue of capital is likely to enhance the company's visibility. I think one of the important challenges, whether it is SME or main board, in all the companies, irrespective of the size, all the corporates, they need a visibility for their market to grow. For SMEs, they really can't afford the budgets, for a big media plan for visibility. So through the process of IPO, when they file the DRHP and once it gets listed, so greater public awareness is gained through media coverage, publicly filed documents, and also coverage of stock by the sector investment analysts. This all can provide SMEs a greater profile and visibility and also credibility. This also results in more diversified groups of investors, not just with a fixed tenure, and like in case of a debt, they come with different tenures, which may increase the demand for the company shares, leading to an increase in the company's valuations also. Generally, a listed entity is considered to secure a higher credibility ranking than an unlisted one. I'm sure most of you would have experienced even while you approach for the bank funding or even to gain new investors. Generally, they ask, are you kind of a listed entity or not? Now, once the company is listed, it is perceived generally as big and credible. Because the company is governed by a market regulator. So you're being governed, so that actually adds the tag of credibility. And also the listing process ensures due diligence of the company. So that is perceived to enhance the transparency in the business. And it can also help in growing the business and add new clients. An increased visibility coupled with credibility helps the entity in adding and winning new clients, expanding to new geographies. Today probably you are known in the state, being a small SME, but once you're listed and once you gain the visibility and also there is a credibility, you can actually venture into the other states or even to the foreign markets, global markets. If a company is not listed, the value of its shares is as recorded in the books, and there is no yardstick as to measure it in the market. However, once the company is listed, market determines the valuation for the shares, the share prices. This also helps in knowing the true value of the company. If you are hearing that today XYZ has gone up in the rankings from say third to second or slipped from second to third richest man in the world, it doesn't mean that their cash in bank accounts have increased or come down. It's the value of the shares that they hold really give them those valuations. And that is, of course, any entrepreneur would like to have right set of valuations for their entity. As part of process of listing, SMEs are required to adopt the norms of corporate governance, which is aimed to ensuring the transparency and fair conduct. So this corporate governance also will benefit the company in a long run. And we already discussed about migration to the main board. So NSE Emerge platform is kind of considered to be a stepping stone for many SMEs to emerge big on the main board platform. Corporates, after spending 2 years on the Emerge platform and having paid up capital value between 10 to 25 crores and market capitalization. So basically the valuations given in the market, if that is more than 25 crores, they are eligible to migrate to the main board. Of course, subject to the meeting of the other eligibility criteria and the meetings, board meetings, that it has to get approval and all. So also know the experience of being listed on Emerge platform, that whatever that is, that experience gained in terms of regulatory environment, disclosures, submissions, and compliance, etc., done on Emerge platform could be a learning platform for corporates aiming to list on the main board. Also, it is relatively less expensive for corporates to list on Emerge platform than to migrate to the main board rather than going directly to the main board for small and medium companies. And even on the liquidity for shareholders, becoming a listed public company establishes a market and also liquidity. We've discussed there are market makers who have been, who would be appointed, as it's a mandatory requirement. So there will be, there is no problem in terms of entry and exit into the company's shares. That actually provides continuous liquidity, and that the important thing is that instills confidence for existing as well as prospective investors into the company. The borrowing terms also, once listing on Emerge, the benefits to improve or to negotiate on the borrowing terms of the debt with the banks, because now you are seen as more credible. The ranking also would, the ratings and the ranking would be better. So, and you are seen as more credible and visibility increases. That also helps in negotiating borrowing terms with the banks. And once listed, shares takes a form of currency for mergers and acquisitions without affecting the cash flows. Simply companies can work out on the ratios of exchange in M&A deals without impacting their cash flows. And another important challenge that SMEs face is that in terms of retaining the right talent pool, that once listed, the company can offer ESOPs to the performing employees without even impacting the cash flows to retain the companies with them for longer periods. And also this helps them to attract new talent from the market. I'm sure you would have seen, or generally, at least I've seen the companies, the career advertisements or job openings where they highlight that they are a listed entity. That adds to the credibility and helps in kind of getting more investors, more talent pool into their more higher caliber employees into their company. And also shares takes form of collateral to get additional rounds of funding from the banks. So in terms of initiatives, this is all about the advantages of being a listed company. So what we have seen is the role that the SMEs really play and what are the challenges that they were facing, and how the entire platform or ecosystem has evolved, the background of it. What is the eligibility criteria for a company to get listed, and who are the right bets, when they should consider themselves to access this particular platform. Then we have seen what is the process of getting listed, and also we've learned what are the advantages, what is the value proposition that as an issuer or as a prospective SME company who is actually looking for listing, that would accrue to them. In terms of, we just wanted to share some of the initiatives that we undertake for spreading the awareness on the platform. We tie up, we continuously engage with various professional bodies. We do the workshops, the CP programs, and the ICI, ICSI, professional bodies, industrial associations, clusters, and engage with various trade bodies. In fact, today's session, thank you very much. I would like to thank HCC for giving us this opportunity. In fact, it's part of one such initiative. And also we very actively work with state governments. In 2020, we have also entered into an MOU with Tamil Nadu government. Today, as we speak, we have MOUs with 10 state governments, whereas 4 or 5 of them have come up with the policies in their industrial policy. They've included subsidizing the expenses to an extent of the SME listing expenses, for the emerge companies or the SMEs which are coming from the state. In fact, Tamil Nadu government is also considering on similar lines, that we would, once that gets finalized or, it's been included in the policy, then entities or SMEs in Tamil Nadu also kind of can take that advantage. So we work with various state governments, even in spreading the awareness along with their trade bodies, MSME institutes, and we in fact work along with banks also, because banks also express that there are some good enterprises, SME units, where they are not able to kind of do additional rounds of funding, though they are very sound, just because they're because of the limits that they've already hit. So we also closely work with banks to reach out to their SME clients. And just to share, we also have an index which we have created on SME companies, which is known as Nifty SME Emerge Index. This is how the index looks like. It is launched in November 20, 2017, with a base date of December 1st, 2016. So the base value of the index was 1,000. Now today, as we see, this is as on yesterday, it is above 4,500 levels, which means in the last 4 years of time, 4.5 years, the market cap of these companies, it's a collective performance. It reflects the collective performance of the companies on the Emerge platform, how their wealth has grown. So this is a thematic index, and one can see this gets computed at the end of the day basis. One can see how these companies which are listed on NSE Emerge have collectively performed. So we have the regional office is Southern Regional Office headquartered in Chennai. We have offices in Southern region also in Hyderabad, Bangalore, and Kochi. Here, Chennai, Senthil Mugan is my colleague who leads our SME Emerge initiatives in the state. Those are his contact details. We have offices at all these locations. We have mentioned about our regional offices and also the branch offices. We'll share our coordinates, and of course, HCC has our coordinates. If anybody wants to know more information, they can always reach us. In terms of questions, there were some questions which were kind of raised, which were shared. Sir, how would you like to answer the question, or how do you want me to take up the questions?
President, can I ask a question?
Yes, sir, please.
Yes, Mr. Navapan, please.
Yeah. First of all, it's a very useful event for all our members, and I would like to thank the Gauri for being here and taking us through this. Now, 2 questions I wanted to ask. Before that, President, if this an article can be published in our journal, it can reach out to all the
yes, sir. With Gauri Shankar permission, we will do it.
Yeah,
yes, sir,
PPT also probably, if they permit, we can circulate it to our members. Now, 2 questions. One is, can the debts of these companies, SME companies, be listed? Like their bonds or rated bonds or debentures, can it be listed? This is number 1. Number 2, you mentioned about the SME Emerge Index, Nifty SME Emerge Index. It's very interesting. From a base of 1,000 in 2016-17, it has gone almost closer to 4,500 or 5,000. Okay, which means 1,000 rupees invested 4.5 years or 5 years back will be 5 times, appreciated 4.5 times or 5 times. What a very good return. Now, if I'm not sure about a particular stock where I don't want to take a chance, I participate in the Nifty index-based ETF. Do you have any ETF based on, I know that you cannot launch it. Somebody, AMC has to launch it. But probably, I think with some sort of initiative from you to support someone, probably I think the time has come for NSE to think of launching an ETF based on, when people are launching ETF on crypto and other things, I think this is something solid asset. So I think probably you should think about it. Because in the last 5 years, it has given on an average 33% return as per your website, and last 1 year it has given 155% return, which is amazing. But I don't know which company to choose. That's a confusion for a normal investor. So there, this kind of an ETF will be helpful. My first question is on the debt, whether it is listed or can it be listed? Thank you.
Thank you very much for that question. In fact, and thank you very much for your suggestion also to kind of look at or have discussions on creating an ETF on the index. I think that's a very good idea. I think we'll take it internally with our product teams, which deal with these AMCs. Like you rightly said, it's the AMCs which will have to kind of float the ETFs, but however we can initiate the discussion. That's an excellent suggestion. Thank you very much for that. As far as listing debt instrument by the SMEs is concerned, right now it is allowing only equity on the Emerge platform. But the provisions, whether it allows for debt listing also, eventually going forward, that we'll get back, sir. We'll provide that clarity. And if it is not, we will take that also as an internal suggestion. But right now, as how this entire segment has been kind of conceived and proposed and evolved, there is a lot which yet to be done on SMEs, on equity segment itself. And as we see the number of units that we have, or eligible units that we have, Emerge units, and the number of companies that are listed right now, we are talking about some close to 240. And of course, there are, there's eligibility criteria that is there, but still, I think this number could be significantly higher. I think once the segment evolves and caters to its some reasonable potential, and then of course, I think like how the mainboard companies can actually have the opportunities. All those things are also, I think, can be kind of looked at by the regulators here.
Thank you, sir. Mr. Anand wants to know what is the average top line and bottom line of SME companies listing on NSE?
So, on technically or on paper, there is no such limits in terms of any turnover requirement or prescribed minimum turnover or profits prescribed by the exchange. If you are satisfying the eligibility criteria of being there in existence for 3 years operational history and then at least 2 years positive cash accruals, you are eligible. But however, going by our experience so far, or even the interest shown by the market intermediaries, merchant bankers who would be taking it ahead, and even they would do 100% underwriting, they should be interested. So based on experience so far, a top line of 10 crore is generally what we see a lot of companies secure. They're good to go on the platform. But like I've said, that is not a kind of a must kind of a thing. End of the day, your company should be good enough to secure the interest of potential investors, because it's the investors who need to be interested. So you should have a progressive track record in terms of the financials for the last 3 years, and well diversified, not just probably on one particular niche industry, but probably well diversified business lines. I think that makes very attractive for investors. You can actually put yourselves into the shoes of an investor and see, if I want to invest in a company, what is that I really want that company to be. So if that comes across like that, there are no such limits like a top line or a bottom line.
Mr. Gauri Shankar, from my
Sure.
side, some questions. What is the number of trades are happening, average trades? Then what is the volume of trade, rather rupees in rupees? That is two things. Next, third thing is that when this migration you are talking about, somebody is not in SME but in main board. He wants to migrate to SME. It is possible. He's not in he's not in SME, but he's in main board, but he wants to migrate to SME.
So there are two questions that you've asked. One is on the volume activity. The other one is on the migration part.
Yeah.
So like I've said, the minimum trading lot size itself is 1 lakh. So this is a segment where lot of trading,
that only I want to ask
activity.
You mentioned rupees 1 lakh.
Rupees 1
Whether
lakh.
it is 1 lakh number or 1 lakh, rupees 1 lakh.
Rupees 1 lakh, sir. So if the value of that share is 100, then we are talking about 1,000 shares.
Okay. So equivalent to rupees 1 lakh.
Equivalent to 1 lakh rupees worth of shares.
The lot size will be okay.
Yes. Okay. So in main board, we are able to sell one single share also, but here you will have to sell in the lots of 1,000 if the value of the stock is at say 100 rupees. If it is 1,000 rupees, then probably the lot size is 100.
Okay.
So here, even in the market, is objective minimum lot size of 1 lakh, or even the IPO allotment or a subscription on the lot size of 1 lakh. It is basically, and even the number of investors, minimum number of investors in a company being 50, unlike on main board where it is 1,000. So this it is expected that the investor in SME is expected to remain investors for longer, longer time duration. That is one. And even then, if somebody wants to have an exit or entry, there is a market maker who's always there to provide quotes in the order book. And however, that I see it follows the trend, the pattern of the index chart that we are seeing on the screen right now. The volumes also have gone up here right now. As I see the last number, around 5 to 6 crores of turnover that happening on a daily basis.
Hey. Okay.
So, if you look at the overall market cap or even the lot size or the number of investors, given all these factors, it is not expected to be very actively trading intraday kind of markets here. That is number one. So if you compare it with the main board, of course, you will find relatively, less level of activity. Maybe the day of listing, you might see, some good activity, and then it's a time of results announcement or any events, corporate actions, and of course you can expect some good level of activity.
Okay.
And to answer your query, basically, there's nothing called a migration from main board to Emerge board, but probably one will have to kind of delist themselves there, and then subsequently, spend that time of cooling period, and then approach markets as an Emerge company. Otherwise, they have to follow all the delisting norms and stuff like that. There is no reverse. There's no reverse migration upwards or migration downwards.
Mr.
Anand want to emerge on a bigger platform.
Yeah, Mr. Anand wants to know what will be the cost of listing, rather financial budget for listing, approximately.
Okay. So this is again a question. I think when we have discussed about the appointment of various stakeholders, I can probably answer this way. There's a cost which is required for merchant banker, DRHP preparation, appointment of market makers, due diligence by the merchant banker, and appointment of RTAs, appointment of auditors, underwriters. So that is a cost. In fact, when you look at the cost, the exchange, it is not a revenue making activity or initiative for us. There's hardly 15,000 to 20,000 is an annual fees that that goes towards the listing fees. That's it. Whereas the merchant banking, in terms of even there is a road shows for prospective investors that has been kind of done to get money, to get funding. So all that varies from merchant banker to merchant banker, the type of services that you want to kind of avail from them. So they have a lot of things like market making, underwriting, DRHP preparation, road shows for promoting the IPO, then appointment of all other intermediaries, and it all varies from merchant banker to merchant banker. But what we see is around the entire expenses comes to somewhere around 35 lakhs in a issue. There are some minimum expenses that a merchant banker charges irrespective of the issue size, and as the issue size may go up, that might increase a bit, but it is somewhere around 35 to 40 lakhs. And in fact, even these expenses also you can include in the IPO. You can actually cover that in the IPO. You can raise those funds towards that. And these fees also paid at not at upfront, and at various levels, at various stages, these fees have to be paid. And like market making fees is like over a period of 3 years, so on and so forth.
Okay.
But the fees that exchange charges is we spend more in promoting or providing our infrastructure for roadshows and all than what we really collect in the name of listing fees, which is around in the tune of 20,000 to 25,000.
Okay.
Any further questions?
I think last question: can 2 or 3 SMEs in complementary product lines create single parent shareholding company and list the parent?
Yes.
Yeah.
As part of corporate restructuring.
Yeah,
and,
you can do
in
that.
fact, I think the merchant banker would advise, if they have subsidiaries, how to kind of have this restructuring, corporate restructuring. If it is not this has to be converted into public limited company before going for the listing. Changing the constitution, from status of the company from private to public, or even if it is a partnership company, if it is a partnership entity, then converting that into a corporate, and then so all that restructuring is what I think merchant bankers would play a significant role in assisting the SMEs.
Thank you, Gauri Shankar. Over to Chitra.
Thank you, sir. I now invite Mr. Praveen Kumar Tatia, Vice President, Hindustan Chamber of Commerce, to propose vote of thanks.
Sorry. Good evening, everybody. I'm audible, sir?
Yes,
Yeah.
sir, yes, sir.
Okay. On behalf of President and Management Committee, I thank Mr. B. Gauri Shankar, the member team, National Stock Exchange, on highlighting all of us on the guidance how a small SME can list themselves on NSE Emerge. He has highlighted various points like advantage of listing, challenges faced by SME, various NSE instructions what are required, process of listing, how an SME can list them on SME Emerge, and comparison of various with the regular stock exchange to this SME Emerge. We thank you very much, Mr. Gauri Shankar, highlighting the members of Hindustan Chamber on all these subjects. We also thank our chairman, Mr. Anand Rajgopal, taking initiative and having this webinar for the benefit of members. And I thank all the members for attending today's webinar and giving us opportunity to conduct more and more such webinars. Thank you, Mr. Suresh. Thank you, Mr. Gauri Shankar. And I thank Chitra, Madam, our secretary, for organizing the show. Thank you.
Thank you.
Thank you,
very
Gauri
much.
Shankar sir. Thank you, sir. We'll get in touch with you for many more programs. Okay.
Sure, sir.
Thank you,
Thank
sir.
you very
Thank
much.
you. Thank you, Chitra, for
Thank
your
you, sir.
effort.
Thank you, Chitra ma'am.
Thank you, Mr. Anand, for organizing this. Good.
Thank you.
Thank you,
Thank
sir.
you,
Thank
thank
you.
you.
Thank you, Mr. Atul. Thank you.
Thank you all the participants also.
Yeah, thank you, sir. Thank you.
Thank you.
Thank you, sir.